Good afternoon, this is Bob Knight. It's the 27th of January 2017, Chinese New Year. Happy New Year to you. Anyways, this is the chart JNUG. It's the Junior Gold Miners Leveraged ETF. And I've been trading it a bit, scalping here and there, but this was great. Today was a great chart pattern. It had all sorts of great patterns on it that I wanted to point out. Not so much on, moves themselves, but just the patterns that showed up on it. So this is the 1 day, 1 minute chart, and on it I have the 15 EMA exponential moving average and the 5 EMA 5 exponential moving average. So you can see this morning that the stock or the ETF opened and had a little pop in it and pulled back, not really showing any signs there. But in here, it makes a triple bottom, 1, 2, 3. It does break through to, makes a nominal new low in there, but nothing serious, and forms a nice basing pattern. So that's this is support, good indicator of a good showing of what support looks like. Then it pops above that, and the direction of the 15 EMA now is up, and the 5 EMA is above that. So you could look to go long in here where the EMA's crossed. And you can see it never does, and it just keeps working its way up. So it's got a very strong trend. And then just to emphasize that trend, you can see it's got this trend line. So, it comes down, every time it touches down to this trend line, that's all buying opportunities. You could add to a position if you're long. Because the direction, as I say, the 15 EMA is up and the 5 is above it. But then you come to this point here, and it makes a double top. Another technical analysis pattern. Perfect double top. And in this candle here, where it, this is the green one, and then this one double tops in red and then pulls back, that really is a very strong indicator for me to go short when it fails to break this high. And so here, and then another indicator here is the where the EMAs cross. The 5 crosses the 15 to the downside. Now here's another chart pattern that comes into play too. So it's got this downtrend here. That's wave 1 down. We've got wave 2 up, wave 3 down, wave 4 up, and wave 5 down. So that's a 5-wave corrective pattern. And so you could have shorted in here, comes down. This would be wave 2. And when it fails, and you don't know it's wave 2, of course, because it doesn't, it won't tell you that until it fails to break above the high and actually makes a lower high. So you could short in here. You can short at each of the bounces. So short there, short there. Now we're into wave 3. It's much more defined chart pattern. And again, and then this is the triple whammy for it. So wave 3 of the 5-wave pattern starts. The 5 EMA crosses the 15 again, which is a short indicator. As well, it breaks this uptrend line where you could have been buying all along here. You don't know this is the 5-wave pattern because it's still above the trend line. But it fails to make a new high and then rolls over. Here's your wave 3 down. Makes this kind of double bottom here. If I was looking short, though, stay short, I would have stayed short because I'm thinking this is a 5-wave pattern. Comes back up. There's the double top again. So you've got the top there, you've got the top there. So this is wave 4. Fails to break through that. You could short again, and then you get into wave 5. Now I wouldn't, and you could. In a wave 5 pattern, you would normally see 5 go much lower down into this area, probably into this support area here of this $8 range. But it didn't. It found support in here at 8.15, 8.16, And so when it did that and bounced back up, you'd want to be looking to cover, because wave 5 didn't go extend as far as you thought. Now, here's a good reason. This is really shows a good reason why not to trade midday. I mean, this, you know, it really just sort of goes sideways in here. Then near the end of the day, the stock or the ETF again, you know, has a nice run up. You could have been long in here, where you know, made this V bottom, and the 5 and the 15 hours moving up strongly. That would have been, you know, and you're getting later in the day, so you could, you know, it's time to get trading again on it. That makes a nice 15 AMA moving up, 5 moving apart. Very, you know, it's a strong pattern for me. But here, then you can see it makes a double top. Hits that top, pulls back, hits it again, and there's that 2 candle high that fails to break through. Look to go short there. Here's another. You could, if you had a shorted there, or were waiting for these to cross, you could have shorted in here as well, where the 5 EMA crosses the 15, and it makes a very sharp correction down. But this pattern, as well as a V pattern, I mean, these are all great, you know, technical analysis type patterns. The V pattern. Recovery, so you could look to go long when it came back up through this 5 EMA here, go long where they crossed, and you know, it just keeps, it heads back up, but it finds resistance again here at you know, the double at the resistance level there. You could have shorted it, but you would have, you know, probably wanted to cover, you know, like with that price action there, I probably would have covered it. It is looking not a variety of different technical patterns in on one day. I hope you enjoyed it.